You ever be stuck in traffic behind a brand new truck? Lifted, chrome everywhere, leather seats, giant touchscreen, and you're just sitting there thinking, that monthly payment is probably bigger than my rent. You glance at your own dashboard, the check engine light's been flirting with you for 3 months, and you start doing math in your head. Am I the idiot for not upgrading? Or are they the ones getting crushed? Right now in America, the average new car payment is around $750 a month. And for a huge chunk of people, it's over $1,000. That's literally becoming the second biggest bill in the household after housing. And here's the wild part. A lot of the people driving those $60,000 trucks, they actually make less money than you do. So today we're talking about the car payment trap nobody talks about. How a totally normal $700 car note quietly turns into a six-figure wealth destruction machine on four wheels. And how to escape it before it eats your entire future. By the end of this video, you'll know 3 things. First, how to tell if you're already in the trap. Second, what that car's really costing you once you add up interest, insurance, and lost opportunities. And third, the exact steps to get your life back, without having to live like a cave person or drive something that barely starts in the morning. Meet Jake and Emily. Jake's 29, works IT at a mid-sized company. Emily's 28, she teaches 3rd graders and picks up extra shifts in the summer. Combined income? Around $85,000 a year. They pay their bills, they save a little when they can. These are not irresponsible people. These are the people you sit next to at work, the couple that brings a casserole to the neighborhood barbecue. And like pretty much everyone else in America, they've been seeing the ads. Every Sunday football game, every YouTube pre-roll, shiny trucks splashing through mud in slow motion, happy families loading soccer bags into the back, that deep voice saying, "You deserve it," 0 down, low monthly payments. Their old car, it's fine. The AC takes a minute to kick in. There's a stain on the back seat from when their niece spilled orange juice. But you know how this goes. Jake wants something nicer, Emily wants something safer, and honestly, they both kind of want to feel like they've finally made it. So one Saturday, they just go look. They walk into the dealership telling themselves they're being adults. We're just seeing what's out there. We're not buying anything today. The salesperson smiles because they've heard that sentence 1,000 times. They say they're looking for something reliable and safe, maybe a family SUV or a truck. The salesperson steers them right to the truck with the lights perfectly hitting the fresh wax. It's got the big touchscreen, leather seats, wireless charging, stuff they didn't even know trucks could do. Jake sits in the driver's seat, Emily's in the passenger seat, and the salesperson leans in like, "Just imagine taking this up to the mountains. Plenty of room if you guys decide to have kids." And in that moment, they're not thinking about interest rates or depreciation. They're picturing Target runs, road trips, Christmas visits to the in-laws. It feels like a future they want. A future they... Sticker price? $70,000. But of course, no one says $70,000. The conversation switches immediately to, "What kind of monthly payment are you comfortable with?" Jake shrugs. "I mean, we could probably swing something under $1,000. "Perfect," the salesperson says. "Let me see what I can do." Fast forward an hour and a half of coffee, paperwork, and just talking to my manager. And they walk out with an 84-month loan, barely any money down, and a payment just under $1,000 a month. On paper, it sounds manageable. Hey, it's under $1,000. That fits the budget, right? But here's what actually happens when the dust settles. You've got that $950 to $1,000 tenuous monthly payment. Insurance jumps because now it's a brand new $70,000 truck. There goes another $150 to $200 a month. Gas, routine maintenance, oil changes, tires. Call it another $250 to $300. Without even trying. All in, Jake and Emily are now dropping around $1,300 every single month, just to move their bodies from point A to point B. That's more than a lot of people pay in rent. So now the trade-offs start. They cancel the weekend getaway they were planning. Date nights turn into, let's just cook at home. We've got that truck payment coming up. Emily starts checking the bank app before buying groceries. Jake lies awake at night running numbers in his head instead of sleeping. Nothing about their life feels upgraded, except the vehicle. But hey, at least when they pull into the driveway after another long day of work and money stress, they can sit in the driveway, turn on the heated seats, slide back the panoramic sunroof, and enjoy the most expensive parked nap of their lives. Here's the thing. Jake and Emily aren't dumb. This didn't happen because they can't do math or because they're bad with money. It happened because there is an entire system. Billion-dollar companies, marketing teams, lenders, manufacturers, all working together to make an impossible payment feel totally normal. Let's start with the ads. Every car commercial you've ever seen is selling you an identity, not transportation. You deserve this. You've made it. You're a good parent if your kids sit in this back seat. It's never, here's a $60,000 liability that will quietly trap you for the next 7 years. They don't show you logging into your bank app at 11:47 p.m. to make sure the payment cleared. They show you slow-motion shots of a truck splashing through mud with dramatic music and a golden retriever in the back. Now fast forward to the dealership. When you sit down at that little desk with the plastic plant and the printer that never stops, notice what they don't ask you. No one says, hey, what kind of car actually fits your long-term financial goals? They don't ask, how do we get you something that lets you build wealth over the next 10 years? The question is always the same. What monthly payment are you comfortable with? And the moment you answer that, I don't know, maybe around $750? Maybe under $1,000? The game is over. Because now they can take that giant price tag and just stretch it like pizza dough. 68 months, 72 months, 84 months. Keep extending the term until that huge number turns into, see? It's only $750 a month. Totally affordable. On paper, it looks friendly. In reality, you just agreed to send a chunk of your paycheck to the bank every month for the better part of a decade. And look who wins when that happens. Lenders get years and years of interest. Manufacturers move expensive metal off the lot. Dealers collect their commission and bonuses. There's a whole food chain feeding off that one decision. The only person not winning in this picture is the one who has to make that payment for the next 7 years no matter what happens in their life. Lose a job? Too bad. Have a baby? Too bad. Rent goes up? Too bad. The truck still wants its money, and it gets worse. Right now, a massive chunk of people who financed a car in the last few years actually owe more than the car is worth. That's called negative equity. And it's exploding. Here's how that plays out in real life. You get tired of the payment. You're bored of the car. Maybe you see the newer model with the even bigger screen. So you go back to the dealership and trade in, but the old loan doesn't magically disappear. It doesn't get forgiven. It just gets quietly rolled into the new loan. So now you're driving the new car, but you're still paying off the old one inside that payment. You're basically paying for 2 cars while driving one. It's like using a brand new credit card to pay off the old credit card. Except this one comes with wheels, a new car smell, and 8 more years of your life locked in. All right, let's put some hard numbers to this because this is where that little car payment turns into a full-on wealth shredder. In the US right now, here's the snapshot. The average new car payment is around $740 to $750 a month. The on average loan term for new cars is pushing 69 months. That's almost 6 years strapped to the same payment. Nearly 1 in 5 on this way. New car buyers is signing up for a payment over $1,000 a month. And total auto loan debt in America? Over $1.5 trillion. Car payments are literally becoming a second rent. Think about that for a second. You've got people paying rent or a mortgage. and then turning around and paying something that looks a lot like another housing payment just to have a nicer ride to work. And it's not like everyone's handling it fine. Repossessions, cars getting taken back, have jumped to some of the highest levels we've seen since the last big financial crisis. More and more Americans are falling behind on car payments than we've seen in decades. So if you've ever felt like your car note is strangling your budget, you're not crazy. The numbers back you up. Now let's zoom in on just one example because this is where it gets painful. Let's say you finance a $50,000 truck at 7% interest on a 5-year loan. Bidisåstarted, 60 months, your payment is roughly $990 a month. By the time you make that last payment, you've paid around $59,400 more in total. Now the dealer says, hey, we can make this more affordable. Let's stretch it out a bit. So they bump it to a 7-year loan, 84 months. Suddenly that payment drops to around $755 a month. Feels a lot better, right? Way easier to say yes to. But now your total SPY paid over those 7 years, it jumps to around $63,400. So you save about $235 a month today by paying almost $4,000 extra over the life of the loan. That's the game. They don't lower the cost of the truck. They just stretch your pain out longer so it feels softer. It's like renting your own car from the bank and paying a premium for the privilege. And we haven't even talked about what the truck itself is doing this whole time. Here's where it really hurts. Cars fall in value fast. By year 7, that $50,000 truck might only be worth conservatively $20,000 to $25,000. But if you did, a tiny or zero down payment, a long-term loan, maybe rolled in a little old debt from your last car, it is very possible you've paid over $60,000 to end up with a vehicle worth less than half that. That's not transportation. That's a wealth destruction device with cup holders. And remember, this is just the loan. We're not counting higher insurance, more expensive tires, premium gas, all the little upgrades and accessories that magically show up on your credit card. Now, let's flip the script for a second. Imagine instead, you drive a paid-off older car. It's not sexy. It doesn't have a giant tablet in the dash, but it runs. And you take just $400 a month. Less than that normal big car payment, and you invested instead. At a 7% return, over about 7 years, that grows to roughly $43,000. So the real cost of that fancy, stretched-out car note isn't just the $60,000 something. You send to the bank. It's also the big $40,000 plus dollars in wealth you never give yourself the chance to build. Every oversized car payment is like a little time machine, stealing money from future you. Why am I to impress people who won't even remember what you were driving 3 days from now? Look, this isn't about shaming anyone. If you're hearing this and thinking, wow, I've made some terrible decisions, take a breath. The system is literally built to push normal, hardworking people into payments they can't actually afford. You've got billion-dollar companies, professional marketers, and sales systems all pointed at your brain 24/7. You were never meant to walk into that game and just magically win. But here's the part nobody can do for you. You still have a choice. You can stay in the group that says, well, this is just how it is. The dealer said I could afford it. Everyone has a big payment, whatever. The I do what the dealer tells me group. Or you can move into a different identity. I'm the kind of person who uses cars to build wealth, not destroy it. Not, I drive the coolest thing in the parking lot. I'm the one whose net worth quietly climbs while everyone else is flexing in the lot. So, how do you actually do that? Let me give you a few simple rules that protect you from the trap, even if you're not a money nerd. Rule number 1. Keep your total car cost, payment, insurance, gas, under about 10% of your take-home pay. Not 10% on the payment alone, and then oops, insurance and gas are another 8%. All in, under 10%. If you bring home $4,000 a month, your whole car situation should be more like $300 to $400, not $1,000. Rule number 2. If you have to finance, aim for a loan you can kill in just 3 to 4 years, not 7 or 8. If the only way that car fits your life is by stretching it to 72 or 84 months, that's your sign it doesn't fit your life. Rule number 3. If you can't put at least 10 to 20% down, without touching your emergency fund, the car is probably too expensive for your current season. That doesn't mean never have a nice car. It means have the nice car when your money can handle it. Now, that's how you avoid the trap going forward. But what if you're already in it? Let's break this into 2 groups. Group 1. You've got some equity, or at least you're close to even. If selling the car and moving into something cheaper gets you out of the giant payment and out of being upside down or very close, that might be the pay fastest raise you'll ever give yourself. Imagine dropping a $900 payment down to $350. That's like giving yourself a $500 plus monthly raise after tax just by driving something less shiny for a few years. No online course or side hustle is going to beat that kind of instant relief. Group 2. You're really underwater. You owe way more than the car is worth, and the trade-in number makes you want to throw up. In that case, stop trading in. That just rolls the pain forward into a new loan with a new smell. See if you can refinance to a shorter term with a better rate. Not to lower the payment so you can relax, but to cut the life of the loan. And then for a season, you go on offense. Every extra dollar you can find goes at the principal. Bonuses, side hustle money, tax refunds, that random $80 you didn't blow on Amazon this month, and you make yourself a promise. This is my last too big car until I'm out. After this, my cars.